looking at. So every week we publish a weekly price projection for various currency pairs here at Oku Markets. So I've put the little table in the bottom right for this week's price ranges, and you'll notice that this is a range. It's not a one directional rate. We're not saying the rate is going to go to this point. We're going to say it's going to trade between these ranges, and we do so with a 68% confidence and a 95% confidence. So what I've done is I've plotted all of these weekly predictions, if you like, from the start of this year for sterling against the dollar. And we can see the light green middle band is the 68%, and the slightly darker shaded band outside of that is the 95% band. And then I've plotted the daily high and low for sterling dollar in that each week. And it's remarkable how often markets stay within those bounds. But we can see where there's little moments where the market will go beyond the 65% and into the 95%. And then, in fact, if we look at sort of 20th, 24th of July, the high actually broke through into what we'd only expect to see 2.5-ish% of the time. Those are really good signals for buying and selling. So what I would suggest is, can you time the market? Yes. And if I were to do it, I would do it by looking at our weekly price forecasts, and I would potentially look to place orders around those levels. But I would ask these questions first. Is the market trending? If it's going against you and it seems to be trending that way, it might not be a good idea to seek a slightly better price. Is the rate at an extreme? That could be a good signal. Do you have a few days in a window? Because markets move around a bit, 50, 100 points intraday trading range is fairly common for most currency pairs. And is the current rate within your budget if you have such a target rate? The answer to those questions should give you a clue as to whether it's worthwhile placing an order or a target, an order to call. And the reason I would use this is because it's proven to be very accurate, as you can see, but I'd also use it alongside other indicators, my favorite being really straightforward pivot points with supports and resistance, and they line up really neatly. The final thing I'd say before I ask you guys for your opinion is this is not based on emotion or opinion or gut instinct. This is statistical. It's based on market volatilities. So there's some statistical, scientific base to this. Craig, I can see you're anxious to make a point. What do you think?
Well, I was just going to remark that it is striking to see just how often these two standard deviation moves are happening. And again, just lending itself to a perspective of, why wait?
Why wait?
And again, it's all about context. I think about simply mitigating variability in my exposure. It's just, you just don't know.
Yeah, you just don't know. Okay, good.